Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Wednesday, June the 10th. Well, not a great day for the market today. A bearish day. If we look at the character of the candle, it's red and a fairly large body, which means that the market's sold off. So there's been some net strength from the bears for the day. But we've got these shadows on the top and the bottom, which means that there's been upside price rejection from here and some downside price rejection from here. Now, interestingly though, even though it was a bearish day and we have a red candle, the first time frame trend is still intact. The first time frame uptrend still exists. So it's not the sort of candle that we'd like to see following a very bullish day as we saw yesterday. But the good thing is that that trend is still intact, and there is still potential for us to trade up to around these levels. Now, if we look at exactly where the market opened, where it traded into and sold off from, it's within this highlighted zone of resistance. We've highlighted this with this yellow color, and that is a zone of resistance, and the market tried to trade up into there and sold off. So it's little wonder that the market did what it did. Looking at the little shadow from the day before, we tried to trade up into there and sold off. We closed just below there. This time we've opened there and traded down to roughly about just under halfway of the range of today's candle. So not a lot of positiveness there, but very hard to say whether we're more likely to trend down or to trend up. The only thing working against us, trading down to this area and finding support at these swing lows now, is the fact that that first time frame uptrend is still intact. This is not really a good market for anyone who's looking to take anything other than a very short-term position. Not a good market to trade for in that respect, because the maximum downside that we're going to have at the moment is down to this support area. The maximum upside can be anywhere here within this zone of resistance. So for short-term traders, fine, but if you're looking to trade a little bit longer term, it's not so fine. Now, looking at our Ichimoku indicators, the Tenkan-sen and the Kijun-sen have both turned sideways, which means that the market now has no momentum. Now, I don't think we should be looking to trade a market that really doesn't have any momentum. It's probably a good time to sit on the sidelines and wait until we see some sort of trending action or a break of support or resistance in any certain direction. So just a time to be cautious, depending on your outlook on and how you like to trade. Now, if we do trade down past this support zone, we do have the Kijun-sen here, which will act as support, so it's only just down below that area there, so pretty much within the same zone. If we do trade down past there, then we have a swing low down around 134, and then the cloud or the Kumo down here will act as some sort of support if we do trade through there. Potential for this area here, this previous area of resistance, to turn into support, because we know that resistance can turn into support and vice versa, so there may be potential if we do sell off for the market to trade down through there. Now, interestingly though, we may have some sort of a pattern forming. If we do have a swing high here and the market sells off, we do have a head and shoulders pattern. Here we have the left shoulder, the head, and if we do trade off here and form a swing high, we will potentially have the right shoulder. If we do have that, a line through these lows here will mark the neckline, and a downside break will give us a completion of a head and shoulders pattern. So if we take out that pattern, the target will be the distance from the top of the head to the neckline projected down from the breakout. So if we break out here, the target will be down around here, which will coincide roughly with this area of previous support from the previous swing low. So very important time for this market. If it can trade up, then fine, but if we look at all of this overhead resistance here, all the way up through here, this market's going to do it very, very tough to trade up into this zone.